Let me now bring on board Mr. Divakar Gupta, Managing Director and the Chief Financial Officer of India's largest bank, State Bank of India. Mr. Gupta, exactly a year ago, I remember when we interacted on the same forum, you were criticized for your NPA policy, but I'm sure you're delighted, you're happy that State Bank of India's stock after numbers has appreciated by 15%.
Yes, I think it's been a good story. We've had a good quarter 4 and a good financial year 12. It's been on the basis of very strong NIMs and good cost control and tax management. The NPA numbers as well have come in very well, but I do want to caution that the numbers per se for quarter 4 may not be representative of quarters 1 and 2 of this fiscal. The underlying stress on asset quality remains, though the bank has done a lot and we expect much better performance going into FY13.
You are pouring cold water, sir. Just when I thought State Bank of India, the worst is behind, that statement that be cautious, what you reported for Q4 may not be repeated.
No, you're absolutely right. My words are be cautious, but that does not mean that we are back to Q2 and Q3 of last year. I genuinely feel that the worst is really behind us and the performance on the asset quality is going to be significantly better. All I'm saying is that in Q4 we saw an actual reduction. That was because of a couple of very large one-off upgrades. And that may or may not be repeated. So we should be realistic about knowing that we will still add to the NPAs, but it should come back to trend. If we add 1500 crores or 2000 crores in a quarter, that should not be bad. And for the whole year, a good target would be about 6000 crores.
Okay, still pretty hopeful of the prospects. But Mr. Gupta, SBI has reduced retail term deposit rates by 25 bips in tenors up to 240 days. Now, this reduction is for deposits of shorter duration. What's been the rationale behind that? And does it mean that you expect easing of liquidity to continue, or is it more a product of internal ALM match?
The tweaking, as you said, is only up to 240 days. And I think it's more a rationalization of the buckets into say. The bank would definitely like that a softer interest rate regime emerges. And today our liquidity as well as our interest earnings permit us the luxury of being able to reduce rates. So we are doing it in a graded manner for the shorter duration. And our deposit taking this year has been not bad so far. So if this takes, we would like to reduce rates on both ends, both deposits and on advances, thereby aiding the policy sentiment that rates should come down.
Mr. Gupta, I have not asked you this question in the past. We've always talked about NIMs and NPAs. What is happening to State Bank of India's market share in the overall banking space?
No, our market share has been between 16 and 17% for several years, last 3 or 4 years. So it depends on a quarter. This quarter, for example, at the moment our market share is marginally more than it was on 31st March. But it's very volatile, We consciously over the last 1 year have decided that we would much rather focus on consolidation and the bottom line rather than just go for top line growth.
Mr. Gupta, has there been a reduction in lending rates to SMEs as well?
That's right. That's right. We had a surplus in terms of additional CRR funds released for being deployed as advances. And we have had additional capital coming in. That gives us a plus, and we've tried to pass it on to the segments that deserve it the most. SMEs really have borne the brunt of the downturn over the last 2-3 years. And one approach for us would have been to give a 25 basis point reduction to everybody. Instead, what we have decided is to give 2.5-3% reductions on the SME space to a certain sub-segment which is most vulnerable.
Mr. Gupta, is this reduction in rate only a preemptive measure of what you expect the RBI to do come June 18th?
No, there's nothing preemptive about it. All of us would like rates to come down. We all know that there is stress on asset quality, and one of the factors among the rising input costs is interest. So I think it's just an effort in the direction of seeing that a softer rate regime emerges. And if RBI policy aids that, which I think is widely expected, that will be great.
So if one works with the possibility the Reserve Bank of India will slash rates in the month of June, which is after 2 weeks, do you expect the credit demand to pick up? Do you expect bad loans to become good loans?
No, as we have been saying, very steadily, the Reserve Bank's repo rate is a signal rate. The signal rate only gives a direction or an opinion of where rates should be headed. Each bank will have to look at its own asset liability profile and its interest earnings before it can tweak rates. On the other hand, if CRR also gets cut, then it immediately adds to the bottom line of banks, and to that extent it could affect rates of interest much more directly. I would definitely feel that demand would increase if rates go down, but demand has to increase also as sentiment improves, and bad loans, they need a different fix. They won't become good just because rates are going to be reduced going forward.
But your net interest margins are a function of cost of borrowing. Cost of borrowing again means at the cost at which you're raising deposit. So for FY13, which are the factors which will govern your cost of deposit?
I think credit demand will definitely be a major factor, because that will determine how aggressively we need to gather deposits. Fortunately for the bank, liquidity has not really been an issue all of last year, and we have had good growth in deposits even the first 2 months of this year. So we don't expect an upward pressure on deposits, and if credit demand takes off even then, maybe I think we'll be able to manage. We would try to keep our deposit costs in control.
Mr. Gupta, if the RBI does cut rates come June 18th, is there a possibility that banks like you will cut less on deposits but more on lending rates? As you had mentioned earlier, that garnering retail deposits is a challenge, and in order to boost the credit demand, banks may have to cut more lending rates.
No, we have always been a cost-plus bank. I don't think we price any product merely on what the market will bear. So we would like to give relief wherever possible, but we would definitely also keep stakeholder interest in mind. We won't do anything which will hurt our NIM story. That is the basis of adding to our capital and providing for growth.
Mr. Gupta, you have also declared a one-time 35 rupee dividend with your Q1 numbers. Now that's a very big dividend. Is this a sign of the new State Bank of India dividend policy?
No, our profits have been very good this year. We've done 11,707 crores. The first time we've topped 10,000 crores. This is the third largest profit earning of the country. Among the corporates of India, we are at number 3 in terms of the gross profits. Justifiably, shareholders expect a return, and we've done that.
So are you likely to follow a similar policy for FY13? I mean, can I expect at least 50 rupee dividend from you?
Now, that's very hard to say, but yes, we would definitely like to post a very strong growth on the bottom line. What's
the percentage you're likely to follow? Percentage of dividend yield as percentage of your profit?
Well, it's too premature to put a number.
I'm sure you have a number in mind. I'm not asking you for any guidance, but just a ballpark number.
No, profits this year were 11,700 crores. Profits next year should, in the sequential on a sequential basis, they could be 12,500, 13,000, 13,500. And where they exactly reach would determine the dividend.
So what is the stress point for State Bank of India? What is giving you sleepless nights? I'm sure it's not Kingfisher Airlines. It is something else.
No, I think we have two short-term challenges. The first remains asset quality. We need to do everything to see that asset quality remains in control. So at the top end, on the corporate side, we need to be quick on rehabilitating and restructuring. On the retail and agriculture side, we need to follow up better. And that's what we have been doing. That is what has been bringing us results. We'll do more of that. The second challenge that the bank has is to ensure that while doing all this, we keep our expenses in control. Now, expenses last year grew at 13%, which is very good. I don't think we could have done much better. We need to again continue that and see that our expenses ratio comes down. It's already at 45%, down 2.5%, and it should go down further.
Are your NIMs too good to be true? 4% plus, highest in the industry of State Bank of India. I'm sure your competitors are jealous.
No, I think it's a reflection of the brand equity of the bank. We are all very proud and privileged to be part of State Bank. We have a very strong CASA base, and I think that gives us the strong NIM. Otherwise, there is nothing hidden or one-off or usurious about our strong NIM story. We still have one of the lowest base rates in the industry.
So can I just, note down or archive these two numbers and correct me if my interpretation is wrong. For FY13, you will have a NIM of 4% plus and NPAs of less than 3%?
No, our NIM on a equated basis, taking into account the international book, is 3.85. Is the domestic NIM, which is 4+. So I would think anything above 3.65 would be possible during this year. Some shaving on the NIM would definitely happen as rates come down, because assets reprice faster than deposits. On NPAs, it's very hard to put a number. We are at 4.44. I don't think on the overall book we will reach 3. But on a sequential basis, yes, we added about 14,700 crores of NPAs during FY12. This number should come down very significantly to just about 6,500 for the whole year.